What if I told you that the biggest difference between rich people and poor people isn't how much money they make, it's what they do with the very first dollars they earn? Two people can receive the exact same paycheck, live in the same city, and face the same expenses. Yet one slowly builds wealth and financial freedom, while the other remains trapped in a cycle of living paycheck to paycheck. The secret isn't hidden in some complicated investing strategy. It's a simple habit that changes everything. Rich people invest first, while poor people spend first. Think about how most people handle money. Payday arrives, and immediately the spending begins. Rent, so car payments, streaming subscriptions, new clothes, eating out, weekend entertainment. And if there's anything left over at the end of the month, they might consider saving or investing it. The problem? There usually isn't anything left. Money has a strange way of disappearing when spending comes first. Every dollar gets assigned a job, and investing becomes an afterthought. Now let's look at how wealthy people think differently. Before they buy anything unnecessary, before they upgrade their lifestyle, before they reward themselves, they pay their future first. The moment money enters their account, a portion automatically goes toward investments. Stocks, index funds, real estate, businesses, assets that have the potential to grow over time. They don't wait to see what's left. They decide in advance that investing is a non-negotiable expense. This may sound like a small difference, but its impact is enormous. Imagine two people earning the same salary. One invests just $500 every month into a broad stock market index fund. The other spends that $500 on things that provide temporary satisfaction: a nicer car, more dining out, more shopping. After 1 month, the difference seems insignificant. After 1 year, it still doesn't look dramatic. But after 10, 20, or 30 years, the gap becomes life-changing. Thanks to compound growth, the investor's money begins earning money, and then that money starts earning even more money. It's like a snowball rolling downhill, growing larger and faster over time. Here's where many people get trapped. They believe they'll start investing when they earn more money, but higher income doesn't automatically create wealth. In fact, many high earners remain financially stressed because their spending rises every time their income increases. This is called lifestyle inflation. The bigger the paycheck becomes, the bigger the expenses become. The result? They still have nothing left to invest. Meanwhile, some of the wealthiest people in the world built fortunes by consistently investing before spending. They understood a powerful truth. Wealth is not built by how much you spend. It's built by what you keep and grow. Every dollar invested today becomes a worker that can generate more dollars tomorrow. Every dollar spent is a worker that leaves and never returns. The most surprising part is that investing first isn't really about money. It's about identity. When you invest first, you're telling yourself that your future matters more than your current impulses. You're choosing long-term freedom over short-term gratification. And those small decisions, repeated month after month, eventually create extraordinary results. So the next time you get paid, ask yourself a simple question. Will this paycheck help me look rich today, or will it help me become rich tomorrow? Because that's the choice happening every single payday. Rich people invest first and spend what's left. Poor people spend first and invest what's left. One habit creates assets, the other creates excuses. And over time, that single difference can completely change the direction of a person's financial future. Remember this: building wealth isn't about earning millions overnight. It's about making one powerful decision again and again. Invest first, spend second, and let time do the heavy lifting.